Good morning, traders from each and every part of the world that you're joining this series of the Daily Money Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, today happens to be a day after the CPI was released, and on our series today, we're going to focus on the consumer price index outcome numbers. We will see the effect that has on the US dollar, then relate it to various financial assets, as we also talk about other geopolitical events that have been happening or a follow-up of what we have been doing in the recent past. But before we begin, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time on our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future content that we produce from time to time. With that out of hand, let's go to let's see. Okay, so number one, yesterday we had the consumer price index coming out. The consumer price index, for those who do not have an idea what it is, the consumer price index is an inflation data, and inflation simply mean cost of living. It is an inflation data or indicator of the cost of living in the United States, which has a basket of items which can be generally categorized to be either food, rent or mortgage, which is house loan, or transportation, or car loan. Also, other factors considered in the CPI could be entertainment, health and education, generally the cost of living. And the data which came out, the previous was at 3%. The consensus was at 2.9%. Consensus is what was expected, but the actual one came out at 2.8%. Now, what does this mean? 2.8% is less than is less than 2.9 by 0.1. So we see the CPI price index year on year coming less by 0.1. Now, we know that this will have the Feds, or the Federal Open Market Committee, which is the central bank of the United States, quite interested. How will they be interested? They will be interested to monitor this because among their main roles is to monitor inflation and also to ensure favorable employment. Having this in mind, this is going to make them inform their decision of monetary policy, which is going to overall affect the movement or the appreciation or depreciation of various asset classes moving forward. Now, having that in mind, let's go to the charts and see how these play out. So below expectation will mean a weaker dollar, and if it would have come above expectation, it would be a stronger dollar. Now we know that it is attempting to indicate a weaker dollar. Let's go to the charts and see the interplay of that. McLean, I see your request. We'll see to it. Now, beginning with gold. Gold is approaching the all-time high it had created at 29.54, close to 3,000. And this will proceed. Now, economic data and geopolitical forces, which we define as fundamental analysis, is all are aligning to support the bullish trend of gold, which is what we like to see as traders, because that gives us a much more informed bias. And what is this? The CPI coming out negative, the NFP coming out negative, weakening and struggling dollar, XAU USD, that will get us in confidence to continue with the long positions. and which is supported by the long-term trend that gold has been forming in the better part of last year and moving into this year. On geopolitical forces, the trade wars which are happening and the military war which is also in the verge of escalating in Eastern Europe, and the trade war between United States and her neighbors and also other countries like China, Mexico, and Canada. Especially Canada is causing uncertainties in the market because of the unpredictable nature to impose taxes on imports to the United States from these countries that I've mentioned, just to sample a few. There are also conversations to have tariffs on certain European countries, and this is causing a lot of uncertainties and tension, causing gold to proceed printing bullish. Beginning with Euro USD. Euro USD has tested the key level at 1.09585, and this is supported by the weakening dollar and the somewhat strengthening dollar. Now we see a weakening dollar would not necessarily interpret as a strengthening euro, but the case being as it is, leading countries using euro as the medium of exchange. Here I'm talking about Germany, France, Italy, name them. Germany in precision had just concluded an election not so long ago, and we see shift in power. This is giving investors confidence, strengthening the euro as we monitor other economic data coming from that part, which would indicate a stronger euro. The leadership summits being held to try and mitigate the war in Eastern Europe is also giving investors and traders confidence that the euro will keep on strengthening. Would want to see it retest and possibly break this area of interest to support the narrative of a weakening dollar and a strengthening euro as it seems. A similar scenario we are likely to see on GEU. GEU most of the time is ahead of Euro USD. Slightly they are positively correlated, but GEU will tend to move a little bit more faster than EU. We see it already broke the area of interest at 1.29010, and price is attempting to continue to create higher highs and higher lows, supporting the narrative that if you're in for long position for these particular pairs that I've just mentioned, and of course gold, it would be considered a risk off approach or less risky. On indices, beginning with America's indices, we experienced a bullish run yesterday with US 100 or Nasdaq, but retraced immediately after the news to proceed printing to the downside. This clearly informs the narrative that the US stocks, or what would likely refer most of the time as the Wall Street, where we find many companies, and with this regard to the US 100, which is composed by majorly 40 to 50 technology companies, is reacted positively to the lower in CPI data, but prices continue to print to the downside, giving us a much more needed. All right, so price attempting to continue creating higher lows and lower lows, supporting the narrative that the ongoing tensions in the world are running the markets as we speak, as much as we are paying much attention also to geopolitical events. Off from to euro indices, with our concentration on DAX 40, we see that the DAX 40, or the German 40, is attempting to be in a consolidating market as price proceeds to take out the all-time high as it proceeds. So what I'm trying to say is the German 40 has been experiencing quite a good bullish run, which is likely going to continue amidst the geopolitical uncertainties, and the reason is simply the shift in power in the German state giving investors and traders confidence that the new administration is keen on enhancing companies, which will naturally uh, make their prices appreciate in value. Okay, so on Euro JPY, which it has been quite a while since we looked at it, we see from the daily time frame, price has been creating higher highs and lower highs to suggest a strengthening Japanese yen as compared to the euro. And this has been quite the scenario. We have been quite bullish on the JPY due to recent data that has been being printed. Now, the overall trend seems to be in a bearish scenario, but the incoming data from the Japanese state is informing us of a somewhat improving Japanese economy, which is giving us confidence to get in for long position. And of course, this is going to be a risk-on approach because it is seemingly a counter-trend market, but the fundamentals are telling us quite something different. Remember, what moves the market, McLean, is fundamental analysis. So being in long in this particular asset would make us realize much more possible profits as comparing to being short. And this is due to the positive data that we have been experiencing to the JPY. I know technical traders would attempt to argue that, hey, wait, are we not having a bearish momentum on this particular pair? Yes, we are. So that would get us for short position if we were trading on the technicals. But remember, professionally, it is good to marry both technical analysis and fundamental analysis. And in this case, fundamental analysis is telling us something different. Otherwise, also McLean, among other traders trading this beautiful cross pair of Euro JPY, it is important to notice that it is also in a somewhat consolidating market. Would wait for it to break all-time highs for it to give us much more, sorry, not all-time highs, for it to give us much more confidence. Beg your pardon, not all-time highs, but for it to break the highs that have been attempted to be reached before, for us to consider getting in for the long position. Also, we could wait for it to reach to key levels. For example, the key level at 158.991, for it to suggest that we keep getting in for the long, but this is quite a risky asset to trade right now. No clear price action in place, but fundamentally we are getting to experience a much more stronger Japanese yen. A likely scenario that we're also going to see on perhaps GBP JPY price printing on the upside, bouncing from the area of interest. So we see positively correlated assets also attempting to change narrative from the bearish trend to a bullish trend. So we see a change of character, which is supported by fundamental analysis. Okay, so as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is important then to do your due diligence, and most importantly, you do this by observing risk management. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Take care and God bless.